There is a catastrophic problem that is causing businesses to fail financially in this economy. I'm going to tell you what I'm seeing, how to identify it, and how to fix it. Let's get into it. Hey everyone, welcome back. My name is Eddie Hood. I am one of the partners here at Ignite Spot Outsourced Accounting, and we have the blessing and sometimes the curse of seeing what's happening out in the business world. It's exciting and it's scary, and my goal with these videos is to help you be as prepared financially as possible to grow real wealth in your companies. To explain what this is, I went to one of those business seminars. I'm a big fan of Tony Robbins and Brendan Burchard and all of these guys and gals that help us be the best versions of ourselves. I love coaching. And as I go to these events, I always see the same thing because I'm surrounded by other entrepreneurs, like-minded people that want to change the world, and we're setting our goals and our metrics for success on the same thing. And it is this number that is ruining us. We all get around in a circle and we get our notepads out and we start writing and thinking about how we're going to grow our businesses and how exciting it's going to be. And what I'm finding is that we are all defining our success based on top line revenue. The question is always, well, how much does your business sell? I want to grow a $10 million business or a $100 million business. And there's always this idea that the bigger that number is, the more successful, apparently, you are as an entrepreneur. And I don't really agree with that, especially as an accountant. I get to see the numbers behind the scenes, and I'm seeing kind of an interesting thing happen here. One of the challenges, I think, of being an entrepreneur, and I'm definitely included in this myself because I started this company and I feel these same pressures, is that our ego, my ego, is tied up in the success of the business. And the higher that revenue number is, clearly the better I'm doing as an entrepreneur and we are successful. But for whatever reason, it is an ego game, right? To outdo each other with total sales. So I'm going to challenge you, if you have been setting your business goals and trying to go to 10 million, 20 million, 100 million, let's hit pause on that idea for just a second and consider that maybe there is a better way to measure your success so that you don't go financially broke. Well, okay, if we are not supposed to really gauge our success off of total sales, what should we be gauging it off of? And I'm going to say that you should be gauging your success off of the amount of wealth that you're creating. Now, my job as your accountant is to help you protect cash flow and to help you build a wealthy and financially viable business. Otherwise, what are we doing here? Why are we running around and selling stuff and closing deals if we have nothing to show for it at the end of the day? So we're going to track wealth and not care as much about top line revenue, because honestly, people, I would rather own a $1 million business that is capturing $200,000 in net cash flow than a $1 billion business that is spending $1.001 billion. That just makes no sense. Think about it. The more you sell, the busier you're getting. So if you're not keeping any of that wealth, if you're just spending as fast as you can to get more and more sales, all you're doing is creating a bigger headache. Hey, so how's your business going? Is it going really well? Yeah, man, we are doing great. We are a $10 million company, and I'm so excited about where we're headed. Wow, that is fantastic. How much of that $10 million are you actually keeping? I don't really know how much we're keeping, but we're going to be a $20 million company next year. I got big plans. Man, 20 million is going to be great. You know, my job at Ignite Spot is client acquisition. So I'm biz dev. I'm that guy. And I am in charge of bringing new clients into the firm. So every sales call I get on with our sales team, I am always shocked as I talk to people because most of them have a rough idea of how much they're selling per year. Nobody, however, can tell me what their net cash flow is. In 15 years of doing this, when I ask people, what's your net cash flow? They don't know. They're not tracking it. They're not actually tracking their wealth. They're just trying to sell more and more stuff. So here's net cash flow as it stands. I want you to think about cash coming in your business versus cash going out of your business. But entrepreneurs usually get things a little jumbled here. And that's because it can be confusing. There are a lot of moving parts in your company. When we think about cash coming in, entrepreneurs ask questions like, well, what about my receivables? And what about my sales? And what about interest on my loans or whatever? Like, how do I need to think about this? all I care about as your accountant right now are what I call hard collections. What are you collecting in cash? Hard Benjamins, the $100 bills coming into your business. That's what I want to know. That's goal number one. Let's figure out the actual amount of cash you're bringing in on a monthly basis. And you need to be able to figure that out. If your accountant can help you, great. Worst case, go to your bank statement and just look at all of the deposits coming in and use that as a starting point. But we need to know actual dollars in the door. Now, the second thing is to figure out cash going out the door. And this is a little more challenging because entrepreneurs, myself included, don't always want to pay things as quickly as possible. We like to hold on to our cash. And so we somehow convince ourselves that because I don't have to pay this bill now, I'll pay it eventually. And so it's really not a part of cash flow. I don't know why that happens psychologically to business owners, but it does. So what I'm going to challenge you to do is to look at all of your fixed costs first. Fixed costs are simply the things that you have to pay for every month, no matter what. This is your staff, your rent, insurance payments, whatever. Like, list those out with your accountant and figure out the exact dollar amount that you are required to pay. Next, go ahead and list out all of the bills that are coming in because of projects you're interested in doing. Maybe you're trying to launch a new location or you're trying to start a new marketing campaign and you've committed, right? You've signed contracts or you have set the ball rolling. Lay all of that cash expenditure out and figure out what that's going to cost on a monthly basis as well. Okay, so here's the basic formula, right? Cash in minus cash out equals net cash flow, and we want that number to be positive. So let's say you've done $100,000 in cash in. Great. Now, as you add up all of your cash out expenditures, let's call it $25,000 cash out. Excellent. That's a net cash flow of $75,000. We like that. $75,000 is good. But if it's the other way around and you've got $100,000 cash coming in every month, but you're spending $110,000 cash, you're now obviously upside down by 10 grand every month. And the entrepreneur is going to go, hold on, whoa. It's okay that I'm upside down on my cash flow because I'm a big dreamer and I've got big goals and we've got receivables. I've got $1 million in receivables out there and I've got plans and I've got investors coming in. I don't care about any of that. I'm your accountant and my job is to make sure that you keep your business doors open because until that money comes in, it doesn't mean anything. Once you know what your net cash flow is, you have a magical power. It really is a superhuman power because most entrepreneurs cannot tell you that number themselves. If you can tell me that number, you are way ahead of the game. And guess what? If it's negative, that's great because now you know. Now you have the ability to make some cash-based decisions to build real wealth. Once you actually begin to put $1 into savings, you are $1 wealthier, and that's better than you were yesterday. You didn't spend it. So here's what we're trying to accomplish. We're trying to get the value of your business to go up. And that only happens as your assets are higher than your liabilities. Selling doesn't really affect that. You can sell, and look great on paper, but unless you collect, it means nothing, right? And you're going to go out of business. So become a cash flow king or queen and really manage your business that way. Okay, quick exercise. Let's put this to work and let's make your business better right now. So what we're going to do is once you've identified your cash flow, let's say you are net positive $5,000 every month. I want to challenge you to put that into the bank account or even better, an investment of some kind that will earn a return for you. First thing, as that money comes in the door in the month, you're going to grab that $5,000 and you're going to set it over here and you're going to lock it away and let cash earn more cash. You're going to build wealth with it. The rest of the money will be used to begin expanding operations and running things and paying people and all of the other stuff, right? But let's start by getting money into cash earning vehicles. Hey everyone, if you enjoyed this video and you want us to be your accountants, we would be honored to do so. So the first thing we like to do is see if we're a good fit for you. All you have to do is go to ignitespot.com and you'll click the button at the very top that says free QuickBooks file review. We offer a 30-minute free accounting session where one of our certified accountants will be assigned to your company without paying us. They will dig in and figure out everything that's working in your file and some areas that we can make some improvements in. If you feel like it's a good fit and we feel like it's a good fit, let's figure out how we can grow your business together. All right, go to ignitespot.com. Thanks for watching, and I'll see you on the next video.